Well, everybody, welcome to the first NCOIL meeting of 2025. I appreciate everybody being here. And a welcome to my new Vice Chairman, Larry Walker from Georgia. I don't know if he's on the call or not, but I'm happy to have him. Sad to miss Sarge, but you're on to bigger and better things. And we'll hear more from Sarge here in a little bit. I think that we need to do a roll call first, and we have our new NCOIL General Counsel, Ann Kennedy, on the call to do that.
Morning, everyone. If I haven't met you, I am happy to meet you now, and I hope that I get everyone's name correct. So please, I will start. We have first Illinois Representative Rita Mayfield.
I'm here.
Indiana Representative Peggy Mayfield.
Here.
Kentucky Representative Sarge Pollock.
Here.
See you there. New York Assemblyman Ken Blankenbush. New York Assemblyman Jake Blumenkrantz. New York Assemblyman Jarrett Gandolfo. Michigan Representative Brenda Carter.
Here.
Minnesota Senator Paul Ecke.
Here.
Missouri Representative Bob Titus. Montana Representative Nellie Nickel. Ohio Representative Brian Lampton.
Here.
Ohio Senator George Lang. George Lang? No. Oklahoma Representative Mark Tedford. Texas Representative Tom Oliverson. Utah Rep Jim Dunnigan. Wisconsin Senator Mary Felskowski. West Virginia Delegate David Green. Committee Vice Chair Georgia Senator Larry Walker. And Committee Chair Oklahoma Representative Forrest Bennett.
Here.
That is for the committee. Other legislators we have on the line should be Arizona Representative Lauren Hendricks.
Yeah.
Colorado Representative Rebecca Kelty. Idaho Representative Rod Furness. Iowa Representative Elizabeth Wilson. Kentucky Representative Adriel Camwell. Louisiana Representative Troy Hubbard. Louisiana Representative Mike Johnson. Michigan Senator Mary Cavanaugh. Michigan Representative Mike Harris. Mississippi Senator Hillman Frazier. New York Senator Pam Helming. New York Assemblyman David Weprin. Oklahoma Representative Ellen Hefner. Pennsylvania Representative Greg Scott. Pennsylvania Representative David Zimmerman. And Wisconsin Representative Barbara Dietrich.
Here.
Right. All right, we do not have a quorum, so we will have to entertain a motion to waive the quorum requirement, Mr. Chair.
I've got Representative John Ilg from Louisiana is on as well. I'm not sure.
And are there any other legislators that I?
Edmund Jordan, Louisiana, I'm on as well.
Okay. Thank you.
Great. Per Andy, we need a motion to waive the quorum requirement.
Yes, you need a motion and a second for that.
Brian Lampton, motion to waive the quorum.
We have a motion. Do we have a second?
I'll second.
Thank you. Thank you, Paul. Well, good afternoon. Yeah, good afternoon. It just became afternoon in Oklahoma. Good morning to the folks in the West Coast, and good later afternoon to the people on the East Coast. Happy Valentine's Day. Congratulations on this being what you're doing on Valentine's Day. I am, for one, thrilled about it. And it is good to chair NCOIL's first official meeting. We like to set the expectations very low and then let other chair people exceed those in their meetings. We shouldn't have too much of a meeting today. We have two model laws on the agenda. The first being the Motor Vehicle Glass Model Act, and the second one being the Online Marketplace Guarantees Model. We are going to do final comments today on the Motor Vehicles Glass Model and vote on its adoption. There will not be any action taken on the Online Marketplace Guarantees Model, just a continued discussion in an effort to hear an update on things. As I understand it, there have been additional conversations since our last meeting, and I want everybody to be brought up to date on those things. And then finally, we'll have a presentation and a discussion on a topic that I know is probably on everyone's mind still, and that's the California wildfires and the intersection of insurance there. So we'll begin with the continued discussion and the consideration of the NCOIL Motor Vehicle Glass Model Act. For those of you who were at our last meeting in San Antonio, you may recall there's a lot of discussion about whether or not we were going to have a vote on that. Ultimately, I learned what the processes were and decided to hold the vote. I was thrilled with that, but candidly, I was back and forth on it up to and during the meeting. But I think it ended up great because I know that there were additional conversations had between then and now. The latest version of the model, I think, has been distributed and posted on the website. So before we go anything further, I'd love to turn things over to the sponsor, Sarge Pollock.
Thank you, Mr. Chairman. And as duly noted, we were close to voting on this in our last meeting. But in abundance of caution and really, obviously, we all want this to be right. The best it can be. And so the model was held up to address some concerns. And I agree with you that it did end up being for the best that we didn't vote on it then, that we've had several conversations with the interested parties. And I really, truly appreciate those interested parties and the conversations that we continued after our meeting. And we were able to come to an agreement on an improved version of the model. And there's basically about three things, nothing really hardcore whatsoever changes. It's just to kind of to clarify some things. And Mr. Chairman, I'd like to go over that updated version of the model. One of them is that it includes a definition of the term notice. The second was to make some small changes to what the motor vehicle glass repair shop is required to notify the insured of. And then third, tweaks of some things related to providing the insured certain items such as invoices, estimates, receipts, and notice about collaboration of driver assistance systems. And so obviously that is now something we have to seriously consider with due respect of all these new electronics and things like that, the safety guards that are in all of our vehicles. As I've mentioned before, this model is based on a law we recently passed here in Kentucky in response to rising concerns about the auto glass repair fraud. We took action to protect consumers from deceptive practices in the auto glass repair industry. And above all, this is a consumer protection piece of legislation. And I trust that the committee will support it. That's all I've got. Back to you, Mr. Chairman. Any questions? I'll try to answer for you.
Thank you, Representative Pollock. I don't have any questions, but I think if there's any additional questions or comments, I'll open things up to interested parties that would like to speak first, and then any final comments or questions from legislators. So if there's any interested parties, please use your raise hand function, which it took me about 3 years to find on Zoom. So Ann Kennedy can help me see who we've got. I can see that Hillary Segura has got her hand up, and I think we can start with you. And then I see Eric DeCampos, and you are in the queue.
Thank you, Representative. I'll keep this very short. Hillary Segura, APCIA. I just want to thank the sponsor and all of the parties that have been involved in getting the model to where it is. We strongly support it, and we're happy where it has ended up. So thank you for everyone's work on this.
Thank you.
Thank you, Hillary.
This is Eric DeCampos from the National Insurance Crime Bureau. Just want to echo Hillary. NICB strongly supports this model. We thank Representative Pollock for bringing this forward, thanking everybody for their part in getting this model to where it needs to be, and really just want to echo Representative Pollock's comments that this is an important model for the purpose of consumer protection. It will help protect consumers from bad actors, as well as providing additional tools to combat insurance fraud in the auto insurance space. So thank you very much, and we again very much support this bill. Thank you.
Thank you, Eric, and I appreciate you for keeping the corded earbuds trend alive. That's important. I see now Tom Tucker, who I met at the last meeting. Please go ahead, Tom. Good to see you.
Good afternoon, Mr. Chairman and members of the committee. This is Tom Tucker, AVP for Legislative Affairs for SafeLight. We just want to thank the committee for extending the time for us to work on this bill. As I stated in the winter meeting, the purpose of asking for the additional time was to make a good bill better. What we think we've come up with is an extraordinarily better piece of public policy that we all should be proud of. And we just want to say thank you to all the stakeholders who participated. And we look forward to the vote and supporting NCOIL in the future.
Thank you so much, Tom. I appreciate you engaging on this and visiting us in person in San Antonio. I don't see anyone else on the industry side. Are there any legislators that like to make any final comments? Questions? I don't see anybody. So with that, I will entertain a motion to adopt the model and then a second, and then we'll do a voice vote. So do I have a motion to accept the model? I will move to accept the model. Do I have a second?
I'll second it.
So many seconds, no movers. Always the bridesmaid, never the bride. Well, I have a motion and a second. All those legislators on the call on the committee in favor, please say aye.
Aye.
All those opposed, same sign. It's a narrow one, but I think that we got it, Sarge. Congratulations.
Yay!
Happy, you can. That's a great topic for dinner tonight with your wife. You can
That's
tell her
right.
all about
No
this.
doubt. Thank
Great.
you guys. Appreciate it.
Thank you, Sarge, for your work on that, and thank you for everyone who engaged on that. The model will now be placed on the executive committee's agenda in Charleston for final ratification. The next topic on our agenda is a continued discussion on the Online Marketplace Guarantees Model Act. We've been having a lot of good discussions on this model for about a year now, and there was some discussion about possibly voting on it during our last meeting in San Antonio, but it was pretty clear as the meeting went on that more discussions needed to be held. I understand that a lot of those conversations have happened. So just to set the expectation, we're not voting on it today, but we are here to continue the discussion. I think we all know where it's been, so we'd just love to hear a quick update. And I think, let's see. Yeah, I'll turn it over to Brian Lampton, the sponsor of the model first. Please go ahead, Representative Lampton.
Thank you, Mr. Chair. As you mentioned, since the spring meeting, we have had a lot of conversations. I want to thank everyone for their input. We've talked with the folks at NAMIC and APCIA, and I appreciate everybody's conversations. Also, obviously, talking with the folks at Airbnb as well. We have received some good feedback and are planning on a meeting in the near future, very near future, to address a few more concerns that were brought up. And I believe those discussions are going to continue, and we can hopefully get this thing to a point to where I don't know that everybody's going to be jumping up and down and excited about it, but as we all say, a good bill is something that, oh, well, all right, if this is the way we got to do it. So I think we're working towards that end. A couple of the things that kept coming up, having to do with, is this an insurance? Should it be regulated and treated as insurance? I think we could all agree that no, it's a short-term rental agreement or this particular one are coming from them, but the guarantee is the component that is the discussion matter of is this insurance or not. I asked those folks to send me a copy of the guarantee. I was looking at it. I can't say that I've read the entire thing, but I also I'm looking at comparing it to the what do you call it? The physical damage waiver that rental car agencies offer, and they looked very similar to me. So I think it's safe to say those those two things are similar. Um, in I know that damage waiver at a rental car agency is not, as we know, is not an insurance or not regulated, and even though we we actually call it insurance. So anyway, that was something there that we were uh I think that's kind of the rub right now with this with this. But I am encouraged by the willingness of all the interested parties to continue to work together for uh, uh, cleaning this up, tightening it up, and see if we can get something that we can agree on. That's my update.
Thank you, Representative. I appreciate that. I know this has been a complicated one, and I appreciate everybody that's weighed in. And on that note, it looks like there are a couple of people who want to weigh in again. So I'm hopeful that agreement between the two sides can be reached later this year. And I've maintained throughout the process that I'm happy to consider making changes. I want to open up things to interested parties first, like we did with the last. I'm sorry, my cat Stan is sitting next to me. He doesn't really care, doesn't acknowledge me most of the time. But as soon as I started this Zoom meeting, he has just been my right-hand man in ways that I did not ask for, nor do I want. So anyway, I'm going to open this up to interested parties first. And I see Brad Nail's hand up, and then we will go with Hillary Segura after that. So Brad, please go ahead and introduce who you're with and then give us your take.
Great. Thank you, Mr. Chairman. Brad Nail with Converge, representing Airbnb. Just a quick reminder on what the model addresses. It's based on prior NCOIL and NAIC models. It defines an online marketplace guarantee, and it's limited to three-party transactions, limited to situations where the guarantee being provided is ancillary to the primary business, so it's not someone who's conducting a business in this area. It requires registration with the state so that appropriate regulators can confirm that the guarantee meets the requirements under the law. It requires that the online platform have the financial wherewithal to satisfy obligations under the guarantee, including by purchasing a reimbursement insurance policy. It clarifies that administering a guarantee under these conditions does not constitute the transaction of insurance, and it contains numerous consumer protection provisions around disclosure and communications. Now, following the November meeting, we've had calls with and sent emails to both APCIA and NAMIC, and we've offered some alternative language for their consideration to try to address some of their concerns. I think the best logical way forward is for the three of us to get together at the same time for a session to hash out some what would be hopefully be final language. I know NAMIC replied yes to this. APCIA has in the past expressed a similar willingness. And I think that there are some items that we can address to give them and their members comfort that the model doesn't go too far, that it captures acceptable guarantee activity and makes that the standard in statute, and that it thereby discourages and outlaws questionable activity. I think we can accomplish that with everyone working in good faith. So, and finally, we're aware of the letter that was written by the Wisconsin Department of Insurance on this issue, and we're reaching out now to try to schedule a meeting with them where we can review our program, review the model language, and I believe that we'll be able to alleviate their concerns. We've met with a number of DOIs over the past year to discuss this and have had good substantive reviews of the laws and contracts currently in place and the prospective model law. So that's really the state of play right now, Mr. Chairman, and happy to take any questions.
Thank you, Brad. I appreciate that. Before we get to questions, I want to make sure that other interested parties have an opportunity to weigh in. Let's go with Hillary next, and then Matt Overturf, you are on deck.
Sure. Thank you, Hillary Segura, APCIA. As Representative Lampton said, we have had some conversations with him regarding kind of where our concerns lay, and we've had conversations with Brad, and Brad did send us some information, which was helpful. So I appreciate that very much. And Brad, I did send you an email right before the call about let's schedule a joint call, perhaps with Representative Lampton involved as well. What I would say is where we've been since San Antonio, and I don't want to steal any of Matt's thunder, but we have worked closely with NAMIC and have held some joint industry calls to go through the model in depth and try to lay out where our specific concerns are. The overarching comments that we've received from the industry are that the model as drafted is too vague and too broad, and it allows for the creation of the online marketplace guarantee, but doesn't really provide rules or guardrails or guidelines that providers of other products that do very similar things are subject to. Many state laws do provide an exception to insurance regulation for products offered as incidental to a business transaction, but we feel that the model as drafted has application way beyond just incidental at this point. Many personal lines insurers already offer home sharing endorsements for house, and presumably these guarantees would have coverages, exclusions, and conditions that would be like insurance, but would not have any of the regulatory oversight or restrictions present in the insurance context. The guarantee itself right now contains all of the tenets of insurance, loss coverage for a fee, claim handling, subrogation, but without any of the regulation. We're concerned that the model creates an unlevel playing field, as well as potentially leaving platform users and consumers without necessary protections that they are being promised. I think I'll stop there. I look forward to continuing conversations with Representative Lampton, Airbnb, and NAMIC, and we'll continue to see if there are ways to tighten up the language in this model moving forward.
Thank you, Hillary. I appreciate that. And as always, appreciate your willingness to work with the model sponsor and with NCOIL on this. Mr. Overturf, what say you?
Thank you, Mr. Chairman. Matt Overturf with NAMIC. So I will be very brief so that you can get back to your Valentine's Day celebrations. I will echo everything Hillary just said. Obviously, we've had several conversations since San Antonio with Representative Lampton, Brad with Airbnb, as Hillary said, our members and the broader industry. We've had a lot of good discussions, and we look forward to the additional meetings that we're looking to have here to react to language and see where we can land. So with that, I will conclude. Happy Valentine's Day.
I appreciate it. Would be curious if people are having ongoing Valentine's Day events that have been interrupted by this meeting. That sounds great. I have always felt that the United States is behind the ball on holidays. Other countries do multi-day celebrations, and I think that we should do that too. So I'll be filing some model legislation at the spring meeting for that. I don't see anyone else from the industry interested in speaking. Are there any legislators who want to weigh in on this? Not that you've had a million other opportunities to do so. All right. Well, you may be invited to be a part of another Zoom call with Brian and Hillary and those folks. Well, do you have any closing remarks, Representative Lampton?
Thank you, Chair. Yeah, just want to thank specifically Brad, Hillary, and Matt for continuing to be open to discussing these things, seeing what we can do to get us all in a place of being okay with this. Brad, especially your hard work, and let's as soon as we can, gang, let's get a meeting scheduled, and go over those items, and ask APCIA and NAMIC to give us some ideas of, if you have them, specific language changes and things that we can present, and then let's hash it out and see if we can get ready for Charlotte. Thank you, Chair.
Thank you so much, Representative Lampton. And again, appreciate your work on this. It's important that we keep the dialogue going, and I, Representative, I'll probably follow up with you offline about how to approach this next. The last thing that I want to talk about, and I think that we're all interested in hearing a little bit about, is a presentation and discussion on the aftermath of the California wildfires. As you know, wildfires hit California in January, and the devastation is pretty unfathomable. And for the purposes of our meeting today, insurance was in the news almost as much as the fires themselves. My wife works for Paycom here in Oklahoma City, and informed me that there's a warehouse that they use. She works in the marketing department, and they have this warehouse that they park a lot of stuff in to send gifts to vendors and folks. She lost an entire warehouse full of stuff, which pales in comparison to the losses some folks have experienced. But it's just, I think, an anecdotal example of just how far-reaching these fires can be. Some estimates put the insurance losses anywhere between $20 billion or $45 billion, and we know that behind every one of those dollars is a pretty difficult story. So tremendous loss. And as insurance legislators, I think gaining an understanding of what happened in California can be helpful when any of us have to deal with natural disasters that have happened in our states. In Oklahoma, we have tornadoes, we have fires, we've had earthquakes over the time. I mean, we kind of sample all possible natural disasters. Anyway, here to talk about it today is Sean Kevlin, the CEO of the Insurance Information Institute, and Joel Lotcher from United Policyholders. I'd be really interested to know if I got either of those names right. And I am definitely interested in hearing what everyone has to say. So we'll hear from Sean and Joel first, and then from any interested parties who want to add comments. And then after that, I'll open things up to legislators. So please, Sean, go ahead. Well, I'm sorry, Sean, we can't hear you. I think you may be muted.
There you go. Thank you very much. Appreciate it. Can you all see my screen okay? Great. What I wanted to do is just share very quickly kind of an overview of what's happening in California and as it relates to the insurance market. One of the things that is important, I think, too, to let you all know, if you're not familiar with the III, we have been around for over 70 years as an organization. We were founded by insurance carriers to be a trusted source of information. We try to serve a broad audience, policymakers, of course, consumers, industry professionals, as well as the media. And your comments about the media covering insurance more and more is absolutely right. In fact, last year, III, we set a record with 22,000 media citations about the industry. So a lot happening in our world in and around risk. And that's what the III strives to do. We're a little unique as an organization. We do primarily research and communications work. So we don't do any direct lobbying. I've been one in my career, so there's nothing against it, but III is not a lobbying organization. We don't sell insurance directly either. Just specifically what's going on in Florida. Really what we try and say at III is this is when the industry kicks in as the financial first responder. A key message for us right now as we're speaking with the media, really day in and day out, several times a day, is we want the consumers to understand they need to talk with their insurance professional, get a hold of them, help them understand, get an understanding of what's available to them, such things as additional living expenses, getting out immediate payments for non-inventory items, getting assistance with your inventory. All of these things are happening right now. The Department of Insurance actually released today or yesterday that about $6.9 billion in claims have been paid thus far. So a lot of good work going on, but also equally important to understand, and I think this group probably knows it, but there is capital on hand. This industry strives to make sure that it has adequate solvency in place to manage risk. This is what we've been doing for the 300-year-old history of the industry. So a lot of that you can see in the industry's policyholder surplus, which is spread throughout the 56 insurance jurisdictions, but is right around $1 trillion for private insurers. Just having that capital on hand to make sure those promises are kept. The state also has, and there are several states with them, a FAIR plan that when a person cannot find insurance through the traditional marketplace, a FAIR plan is set up to get that insurance. And that is a very solvent as well plan. In fact, there was an announcement that they've going to issue $1 billion assessment to the FAIR plan. Assessments are a usual tactic that you will see because most FAIR plans in other states don't keep the surplus on hand like a private insurer might and private carrier might. But they do have the assessment process in order to get more capital if needed. This happened in Florida, for example, in 2004 and 2005 when we saw record hurricane activity in that state. And then even on top of that, we've got the guarantee fund system. So in the unlikely item where we might see an insolvency of an insurance company, there's a program in place to make sure, again, that those policyholders with insurance, their benefits and claims are paid. What I wanted to do with you all is also just step back a little bit because I think it's important to understand the homeowners insurance market and what's been happening there, because I think all of you across the country can appreciate that we have seen and are talking about insurance and homeowners insurance rates increasing. So I'd like to talk to you a little bit about what's been behind that in recent years, especially. What really happened in COVID when we had the lockdowns is we also locked down supply chains. And when you lock down the supply chains, it increased replacement costs, is how we refer to it in the industry. So construction materials, things that we need to pay the claims. So this illustration allows you to see through COVID primary years, 2019 through 2022, that inflation went up significantly related to insurance replacement costs. For homeowners in particular, over that 3-year period, inflation replacement costs went up 55%. On average, the industry went up 40%. I think we can all agree that we saw remarkable inflation after COVID, but obviously you're seeing a significant inflation level happening at this. So what does that mean? As we have to increase, and nobody predicted the inflation rates where they were, as those prices increase, you've got to keep more capital on hand to make sure that you can pay those claims in the future. And really what we have been seeing is the industry needing to catch up. It was a large inflationary hit. And so they needed to begin charging more premiums and getting more premiums so that they could cover those costs in the future. We're beginning to see that those inflation levels normalize. And this gives you an illustration coming out of COVID that you see in 2022, you've got over 9% inflation rates. But for the next couple of years, we're in and around the 3% more tolerable, more normal inflation rates. What you're not seeing, though, are many negatives in this table, right? So you're not going to see inflation reduce to the likes of 55%. You're just seeing, as I think we're all seeing across all prices, that things are more expensive. So, and replacement costs are that. So we've got a new level, a new normal, if you will, of replacement costs. And so to give you an illustration of how the industry has reacted to all of this, you see two things on this chart. The first, the bars illustrate what we call the combined ratio, which is simply the expenses that we pay out versus the premiums that you pay. As a business, you want to be profitable. You want to make sure that gets under 100. As you can tell on the far left and the far right, when we're normalizing, what you're seeing the market do, even homeowners, though, it tends to be a combined ratio in the high 90s. It's just because the underwriting for a variety of reasons is challenging, and I'll show you some long-term illustrations of that. Insurers really don't make the majority of their profit on underwriting. They actually make it through their investments. So part of that capital that is kept on hand has to be kept on hand for the long term. So the investment income is actually more the primary source of where insurers see their profitability, and that investment income is usually more so in our research around fixed investments, safe things again, so the capital can be kept on hand. But just to give you a longer term sense of kind of how underwriting has been working over a longer period of time with homeowners insurance, you see the red bars there that indicate a negative or a low amount of profitability, where you see the green 8 of the 28 years that are illustrated here is where you actually saw the industry in a state of profitability as it relates specifically to underwriting. So again, just going back to this last one, as you see those combined ratios over 100, so there in 2023, you saw for every dollar of premium that was brought in, there was $1.10 paid out in expenses. So not a sustainable path. So you're seeing that orange line creep up in order to catch up with the inflation levels. And now last year we saw it really at an inflection point where things and costs begin to normalize, and therefore you're beginning to see the combined ratios go down as well as the premium growth go down. So that's really the overall cycle, longer term. But inflation is not just what goes into the cost of insurance. Natural catastrophes, I think, as we all know, is also a big driver. And we have seen a steady increase in natural catastrophe insurance losses. In fact, since the 80s, loss levels have gone up 10 times. We've set records in terms of insurance costs. 9 of the top 10 record years have been in the 2000s. So a lot goes into it. Catastrophe losses are a big way. You also, though, have a trend of just where people are living. So that the table there illustrates just states that have large populations. Well, those states also have high degrees of catastrophes. Texas being the #1 state in terms of population growth. Texas is vulnerable to every type of natural catastrophe with the exception of volcanoes. So Florida are obviously large hurricane, California, what we're talking about here today. So you've got people more and more living larger populations in areas of harm's way. But beyond just as well, natural catastrophes and those drivers in the inflation I talked about, we've also got a legal system abuse issue in this country where people are going to litigation as a first resort instead of a last. And we're seeing claims increases in this country significantly. We have a study out with the Casualty Actuarial Society that shows claims related to auto, commercial auto, personal auto, for liability alone, just auto liability, in a 10-year span went up $100 billion. So there's obviously normal inflation and natural catastrophe losses impacting those, but those are significant hikes. Significant hikes. Other things that factor into the geopolitical risks that we're seeing, regardless of how you feel about tariffs, they can drive up costs, and also global geopolitical risks can drive up costs too. So there's a variety of circumstances in what the industry is called a hard market, where we're seeing prices having to go up to match the level of risk. The one thing I like to say is insurance is a reflection of the level of risk. It is not the cause. So very quickly into California, and what's been happening there. This chart, and we put this together with our peer group, the Insurance Research Council, really just illustrates the price of insurance in comparison with median income. And this is a state-by-state comparison. So you've got on the far left there, Utah with less than 1% of the overall median income of insurance payments going there, whereas you go to Louisiana and Florida and you're getting 4% of that. Well, where you see in this slide, and I've circled, is California. And California is below average right now in its insurance costs for homeowners insurance. We would argue, though, that is artificially low. It has been made artificially low because of regulatory restrictions that up until this year have been challenging for decades in the state, in terms of being able to price the risk in reflection, price the insurance in reflection to the level of risk in that state. And in fact, what's happened is when you compound the fires that we see regularly, the restrictions that you have in the regulatory side of it, and then the inflation on top of it, this is where and why people have been calling California an insurance crisis. It is unique as a state on the regulatory side. And again, this has changed. So we've got a new regulatory reform, a sustainable insurance strategy that is pointing things in the right direction. But since the 80s, we've had something in California called Proposition 103. That doesn't allow you to include reinsurance pricing in it. It didn't allow for modeling. And we'll put some research out here very soon with Guidewire and Hazard Hub that can really show you just how well modeling can work in managing risk and pricing risk. So we need to have that in modern day. And then the other part of it was being able to adjust insurance prices for times like we've seen of late with large inflationary levels or large catastrophe losses. So the catastrophe losses sometimes we'll hear, well, in recent years up until this year, we didn't see a lot of wildfire activity in California. But you go to 2017 and 2018 and you saw significant record years where the combined ratio was well over 200% after those record years. And so that then has created an average combined ratio in the state of California for homeowners insurance. Average is 120%. So 20 cents again paid out in addition to the over the dollar that's paid through the premiums. So we have seen the reform happen. Unfortunately, as it's been harder to get the rate that they needed because the regulatory system wouldn't really allow you to go over a 7% increase without going through what I would consider an arduous process. And so the anecdotes you would hear is the filings were always around 6.9%. They would file for increases so that they didn't have to go through this consumer group process to get their rates approved. That everybody's seen the light and that things needed to change. Unfortunately, they're just starting to change now. And so insurers had to make some decisions that they couldn't operate in a level of profitability in that state with the way that things were set up. So I think there's hope, but up until this point, January 2025, we didn't see the changes that we needed and had been calling for in the industry for some time. But regardless of kind of the restrictions in California, I think an important final message I want to leave with everybody is really around how and what our future depends on right now, because risks are increasing. And I think from our perspective, we've got to focus more so on resilience. The insurance industry has been in itself shifting from one that just detects and repairs after catastrophe to actually working with customers in ways to predict and prevent the catastrophes. They're happening. We know when they're happening. We know from data that they're happening in areas that are more prone. And there are ways to adapt. But the one key to understand when we're adapting and focusing on resilience is there's a large economic ecosystem that we need to bring together so that we understand and can apply really an economic value that drives people's behaviors to change, and that we can manage both personal and community risk better. So that means looking at how are we building, where are we building, how are we selling things. You really don't get a lot of risk management in the home purchasing process right now. It comes in entirely too late. How again we are purchasing, what's being incentivized. Obviously, insurance is going to play a key role in all of this. But we've done research that shows that we need everybody to recognize that, again, this ecosystem of co-beneficiaries coming together and focusing on problems together that creates some sort of market incentive to drive more resilience. And we do have success. We have seen areas that have been successful in this. California is actually part of this wildfire prepared program right now, where consumers can get certificates to illustrate the mitigation efforts that they have made to make their homes more resilient. California regulators mandate that if you do make yourself more resilient and make those changes, that you could apply for discounts from your insurance company. So this is a type of program that we need, because when you have, there are careful evaluations that go along with how a home needs to be prepared. And in that, it's a standard, it's a certification process. It's something that you're going to need you're going to have more incentive to get the discounts. You'll have more people you have to be certified in some way to become wildfire prepared. And that's similar as well to what we're seeing in Alabama with their Strengthening Alabama Homes initiative. This initiative is funded entirely by the insurance industry, but it's done in conjunction with the Department of Insurance and the University of Alabama. And essentially what it is you're allowing individuals to apply for a grant of up to $10,000 to mitigate risk, in particular wind risk coming from hurricanes in that area. And because it's a public-private partnership, and the Insurance Industries Institute for Business and Home Safety are behind both of these programs and helping them happen. But because you've got a new way to become that fortified standard, you've got contractors that want to be that way. You're seeing property levels. The University of Alabama said that the home price increases about 7% after taking these mitigation efforts. So there are successful programs in place. And if you want a roadmap to how to build a program, III and IBHS and the National Institute of Building Sciences set up just that, a roadmap. How can you build a resilience program? How can you incentivize a marketplace in a community so that you build out and create more action and value to the resilience? So I'll stop there. I know we went through a lot of stuff, but I was told 10 to 15 minutes, so I didn't want to go over time on you all. I know it's important. I know it's valued Valentine's Day. And after the next speaker, I'm sure we'll happy to take questions, or I could take questions now. It's up to you. And my contact information is here as well.
I appreciate that so much, Sean. I like that presentation. I had some questions myself. We're going to try to hold the questions until after Joel is finished presenting, but fascinating stuff. And we all know California is looked to as an example when they tried to regulate insurance for the benefit of consumers and it backfired. And then there are other states that don't. I saw that there was a scale that sort of under the like underinsured rates versus overinsured, like what's more expensive, least expensive, and would love to know when we get to Q&A what factors are involved in that, whether those states that were in the green are just less prone to disasters or what they're doing regulatorily. But thank you so much for the presentation. And Joel, would you please go ahead?
Hello, and thank you for having me. I appreciate Sean's presentation as well, actually. I know this isn't a very romantic way to spend Valentine's Day talking about insurance issues, but I do want to talk about some lovely things that you could actually do for your constituents by putting in place some relevant consumer protections and coverage issues that can be addressed through legislation in your states. So next slide, please. I work for United Policyholders. We are a nonprofit that mainly has built its reputation assisting people through the claims process after a catastrophe. We have staff and volunteers in Los Angeles now, helping people work through their, rebuild process, their claims process. It's an overwhelming thing. I'm a former insurance regulator myself, 35 years with the California Department of Insurance. Was always pleased to see United Policyholders at an event really trusted by people throughout the state and throughout the country. We have people in Hawaii and Florida and Colorado as well. So wherever a catastrophe occurs, United Policyholders tries to pitch in and help any way it can. Next slide, please. We have 3 programs. I'm going to talk about Some legislative changes here. We do spend most of our time assisting consumers, and we have, if you go to our website, uphealth.org, you can see we have ongoing survivor to survivor events and such, dealing with some of the emotional issues as well. So all kinds of, from the financial end, insurance end, emotional end, and that's all come about after a catastrophic event. So next slide, please. So I want to talk about some insurance coverage reforms, basically, that can make a big difference in how easily or how well people actually recover after a catastrophic event. And most of these provisions are now in place in California, due unfortunately to some of the recent catastrophes we've experienced and what we've learned from those catastrophic events. Some of these are more recent in some of our neighboring states that have had more recent events and now are starting to implement these same provisions and protections. And I would hope, my purpose really in appearing here is that you adopt these events or these changes, to legislation. Certainly it's easier to pass some of these provisions after a catastrophic event and everybody's kind of in that, what can we do to help? But obviously it's much more value for your constituents if you would spare them having to go through some of these same challenges that these changes in law can help them avoid. So things such as additional living expense extension of time to at least 24 months and 6-month extensions beyond that. It doesn't change the additional living expense limit. It just allows the more time to collect it in recognition of how long a rebuild process takes. Rebuilds can take many years. And, the money would likely run out for your ALE coverage before that. But understanding that it is a multi-year process and putting timeframes in place that recognize that are important. Another essential change that you might consider is allowing insureds to use both their dwelling and other structure benefits in rebuilding the home. We find people are underinsured maybe 80% of the time after a catastrophe for many reasons. One part is the inflation that occurs after an event. You're going to need all of that coverage and more to rebuild. And another really important one is allowing consumers to take those dwelling benefits and instead build or buy elsewhere. It can be really many months just in debris removal process. Of course, there's finding contractors, getting bids, getting blueprints of what you want to build. It's a long process. A lot of times, people that suffer these losses are in their 60s, 70s, 80s. It is a very challenging thing for them to do and stay kind of in a temporary place in life while this occurs. Moving elsewhere and using those funds doesn't really cost the insurer any money. The payouts can come sooner, but it very much benefits your constituents, and it actually can end up with not ending up with sudden rebuilds in areas perhaps where there shouldn't be immediate rebuilds without consideration for changes in building codes and where rebuilding will actually be allowed to occur. Another one is the process of collecting an inventory I don't know if you're aware of how this works, but the standard approach is if you want to collect on your contents claim, you have to identify every item that you want to be reimbursed for, the date you bought it, the price you paid, the condition in it was in at time of loss. It is a huge inventory loss, obviously, to put together. Obviously, if you've had a total loss, a means of being able to pay out some portion or all of those benefits, some portion immediately, obviously right after the fire, and perhaps as much as the whole contents level at some point in time, would spare the person of going through that painstaking list making that they have to do and recollection of things they had. It would ease the whole claims process in terms of your own claims adjusters' time and dedication to going through this. So this is a real important benefit that can really spare people a lot of heartache of trying to list all the precious items that they had before the loss. So I'll go to the next slide, please. So again, common in many homeowners and renters and condominium policies are 12 months ALE. That really just won't cut it. You might not even have debris removal cleared after 12 months. I know in our Paradise fire in 2018, debris removal was 9 months right there. It wasn't as wide scale in terms of the number of homes as obviously we just experienced here in California. So 24 months is kind of a minimum that additional living expense should be allowed. Again, doesn't change the limit, but it recognizes all these issues that come into play about debris removal, permitting process, getting building plans approved, finding contractors to build what's approved. It is a long, long process. Some insurers have been generous enough to do things that they weren't required to do, but such as allowing people to purchase an RV or fifth wheel. Sometimes people are able to put those RVs on their home site and in that way be able to kind of manage the rebuild process and be close by, not have to find a rental that might be 50 miles from their their home site that they're rebuilding at, and trying to work that building process while living far away. So there's lots of ways that you can make this an easier process, make that insurance contract respond to the realities of rebuilding. Next slide, please. So again, I mentioned buying elsewhere. That of course speeds up, the people's ability to get on with their lives. Typically there might be responsibilities, pay off a mortgage, that type of thing. Of course, that has to be dealt with. But it really kind of eases the personal burden on people with kids, who need to put them in a school, might need to move to an area that has a standing school. And as I mentioned, retirees that may not be, able to deal with the whole construction process. It is a major benefit to be able to move elsewhere with those recovery dollars. Next slide, please. And one of the, of course, major benefits is reducing the trauma. That talks about, again, back to that inventory process. It's time consuming. People have many other things that they need to focus on after a loss. So putting together an inventory is just a lot to ask. In most cases, they're going to use actually a lot of their contents money towards the rebuild. And generally speaking, people ultimately get the full payout. So why not just max them out without going through that process, saving everybody time? We do have a protection in California that at the very least, I hope that you would consider for your states is to have bulk listing of items, things, silverware, books, things that you don't have to identify every title and author of each book that you want to claim, for example, or, that there are just some things that you kind of consider, yeah, we assume you had these, or it makes sense that you would have had this much of that type of item and just pay it out without a, grinding item by item listing. It saves a lot of time for your adjusters. Oftentimes, insurers are using outside adjusters to handle these claims, and obviously the costs are high if you're spending hours and hours going over each detail of every individual's claim. So you can save money on this process as well, since you're likely going to get to the same outcome at the end. Next slide, please. So in California and now in other states, we do have mandatory payouts, immediate percentage of the additional living expense. We know that people are immediately homeless, essentially, after these events. They need to find a place to live. Inflation commonly occurs for the available rental market in the area of a catastrophe. There's typically a down payment of 1 or multiple months towards any rental. So you really want to give people a jump start on their additional living expense benefits as soon as possible. We also, building codes change. It's essential that insureds have coverage for building code changes, code upgrade coverage, typically at least 10%. I know in California, we have had many code changes that have significantly delayed rebuilding in even our very residential neighborhoods where we have had fires. And that is important to do because we do want to build back better. And that requires changes in codes. And we want to make sure whatever new homes are placed, they are going to be more safe and more sound to recognize their environment that we are placing those homes. And these things take time to get through the permit process, the construction process. So and understanding code upgrades is very important. Next slide, please. So just for those who are interested, here are some references to statutes and codes that you might want to implement. I hope you will. Again, this is a great loving Valentine gift you could give to your constituents, is to enact some of these preventions in anticipation of future catastrophe events, not post-event, where you are having people go through these same challenges before you put these protections in place. So next slide, please. So again, I want to remind you, please check us out at uphelp.org. Lots of information to help people go through claims processes, rebuilding process. And we're here 100% for policyholders when they need us. And I'll welcome any questions as well.
Thank you so much, Joel. Appreciate the presentation. Appreciate you both for the information that you shared. Are there any interested parties now that are interested in offering any comments or have any questions?
Mr. Chair?
I see. Yes.
It's
Mr. Klein.
It's Jeff Klein in Charlotte. Happy holiday to everybody. I do work for the American Bankers and their insurance operation, and I just wanted to make two comments. This is an all hands on deck issue. NCOIL was kind enough to pass a resolution at the last meeting in favor of disaster savings accounts. So we're pursuing that with Representative Hefner in Oklahoma, California, and elsewhere. So that'll be one small tool in the toolbox to help people manage their costs. And we've talked to United policyholders about it. And I think secondly, a group that we've become familiar with that may have reached out to Will previously, Fortress Fire out of California, which has a very interesting scientific wildfire assessment product and set of services, and did a presentation through our good offices at the NEIC recently, has been active in this area, and they may be willing to do a future presentation at NCOIL. So I just wanted to mention those two things. Thank you.
Thank you, Jeff. Appreciate that.
Mr. Chair?
Yes, sir, Sarge.
If it's all due respect, I would love to mention Sean, Joel, thank you for your presentation. But I just want to give a shout out to Chairman Forrest there and Representative Jim Dunnigan, who primary sponsored our Strength in Homes Act that we passed last year, which is a fortified roof. Sean, I think you referenced that. So I just wanted to echo and let you know that NCOIL is hearing you, and we're taking care of business and doing some models out there that I think hopefully will help. And just wanted to kind of recognize that work that NCOIL's doing, and didn't know if you knew that or not, but wanted to share that on the call.
I really appreciate it, and it is good work. And the state of Alabama is seeing the effects of that good work. It has more fortified roofs in that state than any other in the country. The insurance market, in comparison to some other neighboring states, is in a very different place. So yeah, you're absolutely right, and appreciate the good work. And that's why I use it as an example. These are the types of that is a true showing of how you can create a marketplace incentive that provides resilience across the board. So it's great.
Well, I was a primary sponsor here in Kentucky, took that model down in Alabama. So it's passed here in Kentucky. We took it all. And then, of course, representative from Utah, Representative Dunnigan now is creating that model for all of us across the country. So thank you for your input today, and just letting you know that it's important that we look at good policy, good models, to kind of look at these situations we're dealing with. So thank you, sir.
Thank you.
Thank you, Sarge. Yeah, we did pass the Strengthened Homes Act in Oklahoma as well. If I was as good at bragging about my legislative efforts as I should be, I'd be governor by now, but here we are. I wouldn't be chair of the Property Casualty Committee, and that's really the feather in my cap, you know? So
I'd just like to mention that in California, we do have mandated discounts. Insurers have to provide for what's called our Safer from Wildfire set of mitigations. They're almost identical to the IBHS wildfire prepared home mitigation standards. And so it's very important to us to rebuild with a more resilient homes than our current stock.
It's interesting on the discounts. It is, discounts are a part of these programs, but they're, and that's part of the research we did with the National Institute of Building Sciences, is that it's still a part. There needs to be a more comprehensive look at kind of how to make communities more resilient. And I'm encouraged to hear, more. Actually, the sponsor of that study was Fannie Mae, so that they could understand how, again, to improve the financing process too. There's a whole, like I said, ecosystem here that if we can figure out ways to incentivize it, it can work really well. I mean, if you look at another program like LEADS, for example, that is a program where you've got, builders and developers want to be doing it. You've got the sellers wanting to sell it, people wanting to occupy LEADS buildings. Those are the types of things I think we can, that's a way I would like us to start thinking about resilience as well. And if I could, Rita Mayfield has a question here, and it's a good one because we get this often, which is our California losses going to be spread to the other states? And the way that insurance, so the immediate answer is no. The way, as much as I told you, a policyholder surplus, that is a national number, but states, the 56 jurisdictions control its own insurance and its own rates. So those rates are approved hand in hand with the regulator, and it makes sure that they are reflective of the individual state's risk levels.
Thank you for answering that, Sean. And Representative Mayfield, I hope that is a satisfactory answer for you. Are there any other questions from legislators? And use that hand raise function if you can. Representative Mayfield, please go ahead.
Yeah, I did have another question for the last presenter. And I'll just preference, using my area. I live in a flood zone. Luckily my house doesn't flood, but if you go 3 streets over, you get like these whole streets that turn into lakes, and where anybody can live anywhere that they want. However, they flood every single year. You see the fire trucks there, they're pumping these houses out. At what point, and obviously the insurance company is paying out. This does, affect everybody else because, the payouts do affect rates across the board. At what point do we say we're not going to pay out? We'll just do a replacement cost. Okay, not even a replacement cost. This is the value of your home today. This is what we're going to pay you. We're not going to give you the money to rebuild again because, we've given you this money 5, 6, 7 times. And this is for areas, that are, whether it's tornado prone, fire prone, or whatever. At some point, something has to give and say, we're just not going to do these replacement costs, because you're absolutely right. The numbers are just going through the roof, with the building materials and everything else. And I don't really think that's fair to all of the other individuals that are in that insurance pool to have to keep paying for these same individuals over and over again. So is there any conversation around that? Has anybody looked at that?
I would say that, well, I'll start, Sean, if that's okay. I would say this. So we do have, for example, we had a CZU fire in California a few years back. That's Santa Cruz Mountains near the coast, south of San Francisco. Because of the building codes put in place for new building in that area, a lot of the homes weren't rebuilt. Some of the sites that they were located on were deemed not rebuildable. These restrictions weren't in place when the homes were built 50 years ago. But so there are new code restrictions on where you can build and when you can build. But generally speaking, an insurer owes the payout if it insured the home at the time of loss. So there's no question of whether it has to give the payout. The question is really just about the underwriting standards that the insurer uses and whether they're going to choose to continue to offer coverage in certain areas that are higher risk. And that clearly has been changing here in California, that insurers have done a lot of non-renewals in areas that they deem as higher wildfire risk. It's one of the reasons that our FAIR plan has increased so dramatically in numbers of policies. So certainly something, I think this is actually aligns with some of Sean's points, that we're going to really be taking into consideration the insurability of where we build and how we build. Because, as premiums escalate, this becomes something that just isn't a minor consideration in the process. It becomes essential that you need to have insurance, and it needs to be affordable. Right. So the only way to do that is to reduce losses or build in a way that reduces losses, the likelihood of losses. And I think we're all on that path. The challenge is we're in a built out environment of many years that didn't necessarily make all those considerations. And those homes are having challenges finding coverage or affording that coverage. And, it's, again, why we have a FAIR plan if you can't find it. But the FAIR plan is very expensive coverage. So it is the underwriting rules that determine, the insurer gets to choose whether it writes a home or not.
Yeah, and I would add that, anytime you have one of the FAIR plans that is the #1 insurance provider in the state, it's usually an indicator of market issues, market troubles. In California's case, we went through the kind of regulatory and issues that they had. A state like Florida, they've had significant legal system abuse. So, before their reform down in that state, the state of Florida had close to 80% of all homeowners litigation for the United States in that state. So those increase your risk as well. But certainly I understand, and yes, this is, I actually one time encountered a realtor that we were looking at a property and said, "You're lucky you're on the side of the street that doesn't flood. And so you don't need to get flood insurance," which, my wife, I think, had to cover my mouth at that point. But the point, we actually have now done a handbook with the National Realtors Association so that realtors understand that they need to help their customers be more resilient, because a realtor isn't selling that one home. They want to sell a lifetime of homes. And in order to have a home for a lifetime, the area where it's building and where we're buying, needs to be sellable and survivable and insurable. So you're absolutely right. And it's just, things like the building codes unfortunately move at a glacial pace. And so that's why some of these strengthen home initiatives that thankfully NCOIL has been promoting, this allows the constituents actually to retrofit, which is one of the harder things to do, is to spend the money to retrofit an existing property. That incentivization is going to be really critical to building community resilience.
Okay, thank you.
Yeah, thank you both for your insights. I really appreciate that. I think my last question, and then we'll try to move beyond this, is in those the United Policyholders presentation, Joel, there were recommendations for coverage expansion in policies. Are you seeing anywhere, and this might be for both Sean and Joel, any carriers? By the way, it is National Insurance Careers Month, which I didn't know existed, and I read it as National Insurance Carriers Month at first. So I was like, well, I guess we're celebrating carriers this month. But to that point, are there any carriers that are voluntarily adopting some of these things, like the additional ALE, because that sort of is a more competitive way of improving things for consumers, but also not doing so through sort of punitive measures from the state? I'm wondering, I mean, as a Democrat in Oklahoma, I wish that we could do more consumer-friendly stuff, but I also see what happened in California, and my insurance commissioner, Glenn Mulready's done a great job of helping me understand why that, while it was a good idea, there was a good spirit behind it, it didn't end up being good. So are you seeing carriers voluntarily adopt this because it might make them more competitive, or do you think it will require state regulation to get some of these policies updated?
I'll jump in again. It's because I was with the Department of Insurance for 35 years and was sent out to assist with the claims process to many locations post wildfire. And there are many insurers had implemented, the changes that I spoke about as part of expediting the process for people in these challenging situations. So yes, insurers they weren't necessarily something they had implemented in their standards, but it was part of their response when they arrived at these locations, and you saw them writing checks for, here is your, here's your contents payout. Or before it was allowed, yeah, we'll let you take your additional living expense and buy a motorhome instead, so that you can, like you're in this remote mountain town, so that you can kind of oversee your rebuild process. A lot of this has happened, some of it's beneficial to the insured. It just gets rid of the paperwork and the details that take up a lot of time, but it also is great customer relations. And, insurers are all people, and their claims adjusters are often people that live, nearby the community where they are interacting. And, it doesn't take much when you visit one of these sites of a post-catastrophic event to make you want to do more or be better. And so I think a lot of insurers have responded to this. Most of these reforms that we have in place in California only got there because the industry accepted those, provisions and worked with the legislators to do things they were willing to do.
I appreciate that, Joel. Thank you. And I appreciate you both for this presentation. It hits close to home for me. My childhood home caught fire several years ago. And while it didn't burn the whole place down, it was a total loss between smoke and fire damage and water damage. And because my parents had really good insurance coverage, I think that the most sort of human thing that I can tell about that experience was, while we are years later still realizing things that we lost in the fire, the most important thing for us was my mom was a really, really good scrapbook artist. She didn't just put pictures in sort of laminate and in a folder. She added art and really beautiful stuff. And we have a cabinet full of them, and they were all in the house. And all because of a specific endorsement on the policy, were able to be restored by some experts here in Oklahoma City. And my mom now has dementia, and so she is losing her memory, but all of the memories that she created for us are protected now. And when people talk about how boring insurance is, I hit them with that story just to put them in their place. So anyway, I appreciate you all very much for the presentation, and I'm sure we'll be having additional conversations about this as extreme weather events continue to get worse. But I appreciate everybody engaging on this issue. Now, is there any other business that anyone would like to raise before we conclude and get back to our Valentine's Day merrymaking? Seeing a bunch of people ready to get off this call, I would like to just make one final announcement. I want to remind everybody that registration is open for the spring meeting in Charleston. I understand that additional hotel blocks have been opened at a nearby hotel, so jump on that. That includes me. I need to make those reservations. And also, if you were in San Antonio, you may recall there were a couple of announcements regarding upcoming NCOIL items. One is that NCOIL will be going through a SWOT analysis. That's strengths, weaknesses, opportunities, and threats. That exercise that the organization is going to be conducting this year. And the other one relates to a handbook that's now being put together by NCOIL that sort of memorializes and formalizes certain practices that NCOIL has been following for the last several years that sort of longer term members know about, but new members may not know about, so that everyone who comes to NCOIL kind of has a playbook to use and is fully aware of the processes. So I think both of those are great ideas, and I'm glad they're happening. And you should be getting an email about that. As always, check your email from NCOIL. If I hadn't, I wouldn't have known that it was Insurance Career Month. So hearing no further business, if there are any legislators left on the call, I would entertain a motion to adjourn, and then a second.
So moved.
Thank you, Representative Mayfield. Do I have a second? I will second it. All those in favor, say aye. And then we'll say bye. I heard enough ayes. Thank you, everybody, for joining the call. I learned a lot, and I appreciated seeing everybody's faces. We will see you in Charleston. Thanks.
Thanks, everyone. Have a great weekend.